All right, let's talk about a number that can seriously change the game for your business $1 million. Now, I know, a loan that big, it sounds kind of intimidating, right? But here's the thing, it's not impossible. It's actually a process, and we're going to break down every single step for you. So let me ask you something straight up. What is the one thing, the one big hurdle that's holding your business back from making that next huge leap? For so many entrepreneurs, the answer isn't about having a great idea or the drive to succeed, it's about capital. And that capital, well, it often has a very specific number attached to it. Yep, $1 million. It's a big, attention-grabbing number, for sure. But the main thing you need to remember is that for a business that's done its homework, this is an absolutely achievable goal. See, getting this kind of funding isn't like winning the lottery. It's not about luck at all. It's about following a clear, step-by-step process. And that's exactly what we're going to map out for you starting right now. Okay, so before we dive into the how-to, let's talk about the why. What kind of powerful advantages does $1 million loan actually unlock for a business? What does it let you do? You should really think of $1 million as a powerful engine for growth. This is the kind of cash that fuels major expansions, pays for those critical tech upgrades you've been putting off, or lets you finally hire that top-tier talent you need. But here's the kicker that a lot of people miss. When you successfully pay back a loan this size, it can seriously boost your business's credit. And that opens up even more doors for financing down the road. All right, now that we're clear on the why, it's time to build the foundation. Because look, before any lender is going to buy into your grand vision, they have to trust your fundamentals. This whole next part is about creating that professional base that just screams credibility and low risk. Now, these 5 things might seem super basic, but trust me, they are the absolute non-negotiables for any lender. An LLC, that's what protects your personal assets. A separate business bank account, that proves you're transparent with your finances. And that DUNS number, that's what officially puts your business on the credit map. Seriously, without this foundation, the conversation with a lender is over before it even starts. Next up, you got to remember that lenders are basically financial gatekeepers. They need to see cold hard proof that you can actually handle the debt. And what you're seeing here are the typical minimums for annual revenue that they look for. Whether it's $100,000 or $250,000, that consistent revenue is the clearest signal you can send that your business has the cash flow to make those loan payments month after month. And then, of course, there's credit. Lenders are going to look at 2 different scores, and both matter. First, there's your personal score. You really want that to be 680 or higher, which tells them about your own financial habits. Then there's your business credit score, like a Paydex of 80 or more, which proves your company pays its bills on time. They look at both, so you've got to make sure both are looking strong. So what if your scores aren't quite there yet? How do you beef them up? Well, the steps are pretty straightforward. Number 1, and this is the big one, pay every single bill on time. Late payments are the absolute worst thing for your score. Number 2, actively work to lower your debt. That improves your whole debt-to-income ratio. And 3, check your credit reports regularly for mistakes and dispute them right away. Doing these things will make a real direct impact. Okay, so once your foundation is rock solid, it's time to tell your story. This next part is all about crafting those key documents that show lenders not just where you are today, but your clear, believable plan for the future. Listen, your business plan is so much more than a formality. It's your roadmap to success. And while every section in it is important, lenders are going to zoom in on 2 things in particular: your financial projections and the specific purpose for the loan. They need to see a clear, data-driven line connecting this $1 million to how you're going to make more money and, you guessed it, pay them back. Now, for a loan of this size, you're almost definitely going to have to talk about collateral. So what exactly is it? Well, think of it as insurance for the lender. It's an asset you pledge as security. If, worst case scenario, the business can't pay back the loan, the lender can take the collateral. It's all about making the deal less risky for them. So, what kind of things can you use for collateral? The common ones are things like commercial real estate, valuable equipment and machinery, or even your accounts receivable. The unpaid invoices from your customers. The bottom line is this: the more high-quality collateral you can bring to the table, the less risky the loan looks to the lender, and that can seriously boost your chances of getting approved. All right, with your foundation built and your plan polished, it's time to pick the right vehicle to get you there. Because not all $1 million loans are the same, not even close. Matching the right loan type to your specific business goal is a huge strategic decision. So let's break down the options. A classic term loan, that's perfect for a big, one-time investment, like buying a new building. An SBA loan could get you the best interest rates, but just be ready for a pretty long application process. A line of credit, on the other hand, gives you that flexibility for ongoing or surprise expenses. The key here is to really dig into the pros and cons and make sure the loan structure perfectly matches what your business actually needs. Okay, we are in the home stretch now. You've done all the hard prep work, you've picked your loan type. Now it's time for that final push, putting together the perfect application package. At this final stage, the details are absolutely everything. You need to be ready to hand over at least 2 years of tax returns for both the business and yourself, plus all your core financial statements like your P&L and balance sheet. And of course, that killer business plan we talked about. Seriously, one missing document or one inaccurate number can throw the whole process off track. Okay, let's make this real for a second. What does paying back $1 million actually feel like in your bank account every month? Well, as you can see, the loan term makes a massive difference. Let's say you get a 4% interest rate. On a 15-year term, your monthly payment is almost $7,400. But if you can stretch that out to a 25-year term, that payment drops to just over $4,300. That is a huge difference for your day-to-day cash flow. So to wrap this all up, here is your final roadmap, your 5-step checklist. Step 1, shop around and compare lenders. Step 2, get all your documents in order. Step 3, talk to a financial advisor to make sure you can truly handle this new debt. Step 4, apply for pre-approval if it's an option. It gives you a great preview. And finally, step 5, before you sign anything, review that contract carefully with your advisor. That's it, the whole journey in 5 clear, manageable steps. You know, this quote from Linda Green, a business loan consultant, just hits the nail on the head. It perfectly sums up what's going on in a lender's mind. It really all boils down to just 2 things: a strong, stable financial foundation and a clear, believable plan to pay back the money. That's the name of the game. And that really leaves us with one last question for you to think about. You've already got the $1 million vision for your business. There's no doubt about that. The real question is your foundation ready to support it? Thanks for tuning in.